welcome to today's session. We are going to study IFRS 8 operating segments. This is our first video. So please comment down any negatives and positives about this video so we can make improvements accordingly. Alright, so without any further delay, let's study IFRS 8 operating segments. Basically, IFRS 8 is a disclosure standard. There are no calculations and all. Even if there are calculations, I'm sure all the SBR students will be able to do that because it's just basic arithmetic. So first we'll look into the definition that is given by IFRS. IFRS 8 specifies how an entity should report information about its operating segments in annual financial statements and in interim financial reports. It also sets out requirements for related disclosures about products and services, geographical areas, and major customers. Other entities that chose to disclose segment information should make the disclosures in line with IFRS 8 if they describe such disclosures as segment information. I know it's a bit lengthy definition. Let me make that clear to you. Imagine there's a footwear company located in the northern part of a country. Let's say the company is ABC and the country is XYZ. So ABC has a few retail shops in northern part of XYZ. ABC has also few shops in southern part and the eastern part. So basically these are neither subsidiaries nor associates. It's just another branch. So there is no consolidation coming here. In this case, ABC will be preparing only individual financial statements. Okay, clear till now? Keep in mind that understanding the concept is more important, so be attentive. Now we don't know which area is their highest profitable, which area is the biggest loss makers, which area has the highest return on investment, which area has the highest return on capital employed and all. If you are able to provide that, will it be helpful to the investors or not? Definitely yes, right? That will be more fair presentation. So if we provide an information and if that information will be highly helpful to the stakeholders of the company, then we should definitely do so. So how do we understand or know that a branch is an operating segment or not? Now, what is an operating segment? Do we classify all the branches that a company has into operating segments? Never. That would be a total time waste and costly too, right? There are some criteria to be met if they have to be classified as an operating segment. Let me highlight it. Their operating results are regularly reviewed by the entity's CEO, CFO, or any other top level strategic decision maker. So why are they reviewing these branches regularly? Because it's important, right? Top level regularly reviews some branches because it's important to the whole company. The next criteria is they must incur cost and earn revenues from proper business activities. It means that an R&D center and all cannot be an operating segment because it incurs cost and does not earn any revenue. The next criteria is those branches separate financial information should be available. So if all these criteria are met, then we can call it an operating segment. Okay. If you have any doubt regarding these criteria, please go 1 or 2 minutes back and see again. As I said, understanding the concept is very important in ACCA. So after identifying the operating segments with those criteria we just discussed, we then come to the next step, aggregation. Basically, in simple terms, aggregation means showing similar operating segments as a single operating segment. Okay. We need to identify operating segments which have similar characteristics. So what are the characteristics? The criteria for aggregating similar operating segments are the nature of the production process should be similar. The type of the customers they are aiming to sell their products or services should be similar. The type of products or services they offer should be similar. The price of the product should be similar. The distribution method or the distribution channel, how they distribute their products should be similar. The production method should be similar. And if possible, the nature of regulatory environment should also be similar. There is no need to satisfy all these criteria, but most of them should be satisfied in order to be aggregated to one or more operating segments. So if 2 or 3 operating segments have similar characteristics like this, then we will show that as a single operating segment. Okay, Just to make sure that you got the concept, let's do a small question. This is not an exam level question, just to understand the concept. Okay. So ABC is a footwear company which sells large collection of footwears through retail shops and its own online website. Okay. From this we can understand that they have two medium of selling, which means two segments. Which are the two segments? Online store and retail store. The products sold in the retail stores have sales prices of 4% more than what is sold in online due to shop rentals and electricity charges. Okay. And ABC focuses to sell their products mainly to the people between the age group of 18 to 27. The quality of the products sold online and offline are the exact same. And the requirement is, should ABC aggregate its retail shops and online stores and show as a single operating segment? So let's see if we can aggregate this or not by reviewing the conditions one by one. So we need to check the nature of the production process. Okay, let me do that. The nature of the production process. We know that the nature of the production process is same, so I'll write that as same. Then we need to check the type or the class of customers. That is also same, because ABC wants to sell their products to the people in the age group of 18 to 27, so that is the class of customers they are focusing on. So class of customers, that is also same. Next we need to check if the products are same or not. The products, they haven't said anything about the products, but we can assume that they are selling the same products, because they haven't said anything that they are selling different kinds of products online and some exclusive products online, so we can assume that that's also same. And the next criteria is price. They have clearly mentioned that the prices for retail stores is 4% more than in the online stores, so that is different. Then we need to look the distribution method, that is also entirely different. One is offline and one is online. The distribution method, that is different. Only one more criteria we need to check, that is the production process. It's been said that the quality of the both online products and the offline products are exact same. That means that the production process is also same. We should assume that the professional judgment, we should use our professional judgment here. So the production process, that's also same. So with all this data, can we aggregate these online and offline stores? Yes, we can aggregate, as most of the criteria are being satisfied. I mean, 1 2 3 4 5 6, we have identified 6 criteria, and 4 of them are same, only 2 are different, so majority of the criteria are being satisfied. So we can aggregate the online stores and offline store of ABC. Everyone understood the concept? If not, please see the example once more to make it thorough. Now we need to move to the next step. We need to see if these operating segments are reportable or not. Yes. From those operating segments, we need to identify which all segments we need to report and which we need to exclude. We don't report all the segments, or we don't report all the operating segments of a company, even if it meets the criteria. So there are some criteria which needs to be satisfied if an operating segment needs to be classified as a reportable segment. If any of the one criteria is met, then we can classify an operating segment as a reportable segment. So these are the criteria for being qualified as a reportable segment. Criteria for being qualified as a reportable segment. Assets are 10% or more of the total assets of all the operating segments. So the branch should be having the branch should be holding the asset which is 10% or more of the total operating segments of the company. The next is reported revenue from operations should be 10% or more compared to the total revenue from operations of the all operating segments. This must include the external sales and the intra-group sales also. The next is profit or loss should be 10% or more of greater. In absolute terms, we'll explain to you what absolute terms is. So by these criteria, we will identify the reportable segments. Also, there is one more condition. The total external revenue of the total reportable segments should be at least 75%. The external revenue means excluding the intra-group sales. If that's not the case, then other reporting segments should also be considered as a reportable segments even if they don't meet the criteria for being reportable. Understood? So, well, few of you may be having a little bit of confusion. If you don't have any doubt, that's well and good. If you have any doubt, I'm going to clear it. So let's do a question to get the concept more clear. By doing that, I'm sure all of you will understand the IFRS 8 operating segments. Company XYZ has identified their operating segments based on their geographical locations. We already know how an operating segment is classified. Remember, what are the criteria? You remember we studied CEO or CFO or some top level should be regularly reviewing and should incur cost and earn revenues and all, right? So ABC have already identified and classified that, and here's the data given about all the segments. What's the requirement? Which all segments should be shown by XYZ as reportable segments under IFRS 8 operating segments. So I guess we don't have to do any aggregations for XYZ. There is no information given about that, so no need to worry. We'll directly see which all are the reportable segments. That's all. So we will check the criteria one by one. Which all are the criteria for being classified as a reportable segment? First one is the asset should be 10% or more. Let's see which country has that. So I'm just going to make the countries in bold which satisfy the criteria. Let me just sum the assets first. So the assets is 20,000. So anything that any country that has more than 2,000 asset will be classified as a reportable segment. First, India. It has assets worth 9,500. I'm making it bold. So it qualifies as reportable segment. The next is China. It has 790. So it's enough for China. Next is Russia. Russia also doesn't have 2000. The next is Thailand. Yes, it has 6,700. So I'm making it bold. It's a reportable segment. Next is Brazil and Singapore. Both of them has below 2000. So they won't qualify as a reportable segments. So we have checked the assets criteria. Now we need to check the revenue criteria. Here we check if any of the segments have more than 10% of the total revenue. Let me sum that up. So the total revenue is, we don't take internal revenue or external revenue, we take the total revenue, that is 2000. So we know if any of the operating segments have more than revenue of 200, then it is reportable segment. All right, let's see India first. Yes, it is reportable. It has 480, making it bold. Also, keep in mind that India is already qualified as a reportable segment by the assets criteria. So if it doesn't meet the revenue criteria, no problem. Don't get confused. India is still reportable. The next is China. It has 190. So China does not meet the criteria. Russia, yes, it has 250. So Russia is a reportable segment. Thailand is also reportable. It has 570. Brazil has 180. So it's a no for Brazil. And Singapore has 330. So Singapore is also reportable. We have checked both the assets rule and the revenue rule. Now we need to check the profit and loss criteria. Remember, it is in absolute terms. I will explain it to you now. So what is the total profit or loss? Let me just sum it up. It's 474, right? We don't take 47.4 as the 10%. We will take absolute, which means we add all the profits, which means we will add 150 and then we'll add 130 and we'll add 200 and we will add 110. So which is 590. Okay, so 10% of that is 59. Now we'll add loss like this, which is 66 and 50, that is 116, and also we'll take 10% of that and we'll see, which is 11.6. So this is in absolute terms we are talking about. So no minus and all, just consider it as 11.6, or else I'll just make it here. So just consider it as 11.6 and 59. Okay, now in this both 59 and 11.6, which is higher? Remember, there is no minus, it's just 11.6 because we should take in absolute terms. So which one is greater, 11.6 or 59? 59 is greater, right? It is clear, 59 is greater than 11.6. So we took 59 because it is greater than 11.6, not because it is profit. Okay, just consider loss was 59 and the profit was 11.6. What we will take? Still we would take 59, right? Because we are talking about numbers, not negative and positive. Got it, right? So now we can apply it in the scenario. So first, India. India has 150. Remember, we are taking 59 as the 10%. So if any of the profit is above 59, then it is reportable. So first India. India has 150, so it is reportable, and I'm making it bold. Next is China. It's negative 66. So tell me, will we consider it as meeting the criteria or not? It has 66 and it's above 59. It's minus also. What do you think? Of course, it will satisfy the criteria, right? We are not taking the signs into consideration when we do in absolute terms. So China qualifies as reportable, and I'm making it bold. Let's see Russia. Russia has 130, so it qualifies, and Thailand, it has 200, so it also qualifies, and Brazil, it has 50, so it won't qualify. Remember, Brazil does not qualify because it doesn't have 59, not because it is loss. If it had loss of 90, then it would qualify. Okay, so next is Singapore. It has 110, so Singapore will also qualify as a reportable segment. Now let's see which all are the reportable and which all are not. So we'll just need any one of the criteria to be met. So we'll just see which all countries has, say, at least one board in them. So for first India, yes, it is reportable. Next is China, that is also a yes. Russia, yes, it's reportable. Thailand is reportable. Brazil is not reportable because it doesn't satisfy any of the criteria of being reportable. And Singapore also classifies as a reportable segment. So reportable segments are India, China, Russia, Thailand and Singapore, and other segments are Brazil. So Brazil will be classified as other segments. The process is not over yet. There is one more rule we need to check. The total external revenue of the reportable segments should be 75% or more of the total external revenue. Remember, this is the rule that we studied. The total external revenue of the total reportable segment should be at least 75%. External revenue means excluding the intragroup sales. If that's not the case, then other operating segments should also be considered as reportable segments, even if they don't meet the criteria for being reportable. Okay.
Now let's check the 75% of the external revenue. Okay. So 766 is the total external revenue, and 75% of that is, just a minute, that is 574.5. So which means that the total external revenue of the reportable segments should be above 475.5. Otherwise, we need to include other segments as reportable segments till that external revenue reaches 75%, which in this case is 574.5. So let's check the total external revenue of the reportable segments. 210 of India, 140 of China, 25 of Russia, 240 of Thailand, and 38 of Singapore. Now that's 653. So yes, it satisfies the 75% rule, so no need to add any other segments. So that's it, guys. That's about IFRS 8 operating segments. Hope you all understood the concept. If you have any doubt, please comment below. I'll answer that. Also, the PDF and Excel will be available in the Telegram group. I will give the link of the Telegram group in the description below. So see you guys. All the best.